I'd like to talk about Sam Zell, the original grave dancer. We should talk about existing home sales, talk about a huge miss at Foot Locker and what it might mean for other retailers. And then finally, I want to talk about interest rates on home loans going to 7 and perhaps the gentle fall from there. Folks, let's get into it. It is Friday, May 19th, and this is your daily financial news. Folks, if you haven't heard who Sam Zell is, do yourself a favor. Take a minute to go ahead and look him up, especially if you are interested in real estate. More specifically, if you are interested in taking advantage of the opportunities that lie ahead. Sam Zell got his start in real estate, frankly, being a manager of student housing. Sam Zell took that experience, ultimately grew to be a multi-billionaire. Sam Zell did a lot of amazing things. Specifically, he gets a lot of credit for starting what is now considered REITs. He built Equity Office, sold it to Blackstone at the peak of the Great Recession, and did a lot of amazing things. He also wrote a book called Am I Being Too Subtle? Sam Zell is specifically important for us, even for the folks that don't have real estate but have interest, to really understand. Specifically because he took advantage in a great way about the S&L crisis. He was aggressive when others were fearful. You can look him up. He has lots of great quotes. I do want to share with you 3 simple rules, Sam Zell, for buying commercial real estate. 1, don't covet trophy properties. You overpay, you kind of get, googly-eyed, and, bad things happen. Number 2, don't buy at auction. Again, that's, an interesting idea. I did buy one property via an online auction, but I wasn't the winning bidder. I was the person who followed up and got it when the first one backed out. But yes, don't buy at auction. And then finally, a very important one for today's environment. How many of you have you said you might want to do this? Rule number 3 for Sam Zell commercial real estate: don't buy outdated office. We are seeing it all over the place where outdated office is being coveted because we think we can get a discount. Again, Sam Zell says don't covet trophy properties, don't buy at auction, and don't buy outdated office. One more quote from Sam Zell, and we will move on to the other important topics from Friday the 19th. Money in the real estate game comes from borrowing long, fixed rate debt in an inflationary environment, ultimately depreciating the value of the loan and increasing value for the borrower. Said another way, folks, and I think I have a shirt that says this: use inflation to get rich. Ask me how. Again, it is very, very interesting. So again, folks, Sam Zell, very active in distressed commercial real estate, took advantage of the 80s, went on to do a lot of good things. And I do want to, again, shout out, he was not only an aggressive buyer, but he sold at the peak. Go look up the deal he did for Equity Office and realize that Blackstone, who is considered the best real estate investors on the planet, Sam Zell sold at the peak. So somebody had to buy, and that was Blackstone. So again, pretty interesting. I want to go a little deeper in the existing home sales. We talked a little bit about it on Thursday. They came in at 4.28. That was down 3.4% month on month. This should not be a surprise to us because we are talking about new listings being down roughly 20%. Rates kind of in the last month, kind of low to mid 6s. We have bottomed, I do believe, at 4 million, although it will be interesting to see what May provides, as again, rates are now approaching 7, but we shall see. Median price on a month-on-month basis was up to 388,800, but was down negative 1.7% year on year. Transactions are down 23.2% year on year. It is very interesting because now National Association of Realtors is starting to talk like you and I are. Prices over a million, over a million, down 36.5%, kind of in and around the median, which again was 388. So their bucket is 250 to 500. Okay. was down 19.7%. Total active inventory is now 1.04 million, according to National Association of Realtor. So again, folks, this is just the bottoming process, right? We are going to be here for a while. I know everybody in real estate wants some kind of V-shaped recovery. It is not coming. I think we are going to be down at this levels for at least another 18 months. So yes, again, if you are in the business, make sure you right size it for this environment. If you are investor in this business, do good or great deals. Make sure you get the right debt structure, all the stuff that we talk about at one rental at a time. Again, you can find great deals. You can find good deals. It's just tough. It's hard. There's a lot of competition below the median, and it's pretty slow above that. I want to talk about Foot Locker. Foot Locker had a pretty atrocious earnings announcement on Friday. Missed top line, missed bottom line, lowered guidance, inventory building, talking about markdowns coming and specials. This is something to watch for as we get more and more retailer reports, right? Foot Locker, active, sneakers and things of that nature. Is this a sign of consumers pulling back? Probably. Is it a sign that we are now really going discretionary versus kind of upgrading? Probably. What does this mean for companies like Best Buy and other, focused retailers, kind of, Abercrombie and, things of that nature, right? Higher priced retail. So we will get some of those earnings announcements next week, which we will talk about in a subsequent video. But very, very interesting. Also on Friday, we did get a report from Dion, who beat top line and bottom line. But yes, I think Foot Locker is the one that we should take special attention to. Got a report from a chief economist, Danielle Antonici. I think that's right. Probably not, but yeah, I gave it a shot. Anyways, he's a chief economist. He is talking about a 63% chance of a pause in June. That is actually down, right? This peaked at 98% right after right after Powell's speech. Now down to 63%. If you watch my channel, you know that's where I've been for quite a while. Danielle is talking about a hawkish pause, and I think that's fair. I think Powell's going to put a pause on the table, but he's going to talk tough. He's going to talk about, hey, we'll be looking at the data. We're going to go into July. We shall see. This definitely will not be a pivot from hawk to dove. I think that is fair. The job market is still tight, and inflation is still too high. Pantheon Economics is out with highlighting some data about why housing is so tough right now. I don't think any of this will be news to this channel, but I think it is interesting to watch people come around to our discussion from the last 9 to 12 months. Pantheon Economics says 24% of loans are below 3%. They quoted Black Knight as their source. I'm just quoting Pantheon. 97% of loans outstanding are fixed. That is a very different environment from the 2006 origination, which topped out at almost 50%. I do think we need to talk about rates. As you saw on Friday, rates were up. The gap or margin between the 10-year and 30-year mortgage is, I think, 3.18. It is quite large. I do think a lot of this is talk from the Fed. We obviously have the debt ceiling drama playing out in real time. So I think we are going to see mortgage rates tick up to 7%. We will talk about in a subsequent video what may or may not that mean. But yes, we got a lot of stuff going on. So folks, that is the daily financial news for Friday, May 19th. Do me a favor, like, subscribe, comment. Let me know what you think. And again, do yourself a favor and check out Sam Zell, Z-E-L-L. I think you will be interesting to see how he took advantage of it. I will warn you, if you don't like colorful language, he may not be your cup of tea. He has been known to swear a few times. All right, everybody, take care of yourself. Have a wonderful day. Later.